Hey, it's Brett from Moonstream with an urgent market warning. Are we headed down to that crash zone, down to 50K, where I've been suggesting that we are likely headed? I think it's 75%, 25%, that we do head down to that 50K buy range. We can see that's where the buyers are. And of course, there's a 25% that we push up to get liquidate all the shorts, where we can see that liquidation heat map. I'll show you that in the chart. So let's go ahead and dive in. I'm going to talk about Bitcoin, the total market cap, and why I think we're headed lower, plus some outliers, some altcoins, just a few that are looking interesting here for a short-term bounce. So let's go ahead and dive in. Of course, I want to start with the fear and greed here, just to touch on this. 23 on the fear and greed today. It was 26 yesterday. Should give us some nice buying opportunities when we get another drop down into these lower ranges, and to pick up some bargains. You know, the markets move on certain cycles and timing. We've done great over the last 45 days buying Zcash and Dash and Venice token, doubled our money on that. Right now is a time to be conservative and protective and watch out for the opportunities, but just taking base hits. This is a 1 hour, 4 hour chart of Bitcoin showing that the buyers are hiding out down here in the 70K range. I have a news article, we'll look at that in a minute, why 70K is the likely next target. But longer term, I do think we drift down into that 50K range, because on this daily chart here, I've been talking about this for a while. Everyone is jumping on the bandwagon for Bitcoin at 50K. I've been saying that for a while now, and I'm going to just turn on our order block detector to see this and to get rid of some of the spaghetti here on this chart. But the order block detector clearly shows that down below is likely where we're headed. And as far as the diagrams here, I've got, I'm going to put my bear flag indicator back on. Let's see, I have to jump to another chart for that, where we can see, I was just doing a class with this, and where is this thing? I don't have to recreate it, but we may have to. Bitcoin on the wrong chart. So basically the 1 hour, 4 hour, here we go. Now on the daily chart, Bitcoin shows that the target down to this 50K region on the measured move. We've already completed one bear flag, which was from this top up here, and then the measured move right down into the lower range of this. We have a new bear flag giving us a measured move with the flagpole from this high low down in that 50K region. So I do think that's coming next. In the total market cap, we can see the same thing on this chart with the total market cap. More important than the Bitcoin price, because, and why I called the top at 125, 124K Bitcoin up here, huge sell resistance in this zone. These are, again, we've visualized the concentration of big sellers and buyers. So up over here, a lot of sell pressure. Everyone thought we were going to 150K, 200K, including me back here, but this clearly said we're headed lower. Bear flag, measured move down in this range, which would equate to that 50K Bitcoin. So also important to know that the tops of these markets, nothing to do with the price of Bitcoin. If we zoom out a bit, the top of the 21 cycle, the 2021 cycle, was exactly $3 trillion to the dollar. You can see that there. We were watching it. One of the reasons I called the market top correctly there. So in this last market top, we hit $4 trillion. Do you see the pattern? These markets move in these large, big round numbers on total market cap. So rejected there, just a little bit over 4 trillion mark. The next bull market, guess what? Where we'll be selling? My targets are 4.8 trillion to 5 trillion, just because of the big round number. Good place to target for the next bull phase, which could be coming as early as this year, maybe as late as 2027. So we'll dive into that in a minute. Let's see. Going down the line, we look at total 2. That's everything but Bitcoin, but including Ethereum, looking very bearish. Likely this looks bad for the whole market, including the altcoins, which you can see in a downtrending pattern, downtrending channel, rejecting at the 21-week EMA and below the 50. I liken this to being below the ice. If you're above the ice on the lake, you're good. Above the 21 and above the 50, you can skate on the lake and have fun. But once you break below the ice, you're drowning, and this becomes the barrier. So more than likely, good time to short alts in mass, all the way down to about the $500 billion area. So that's my read on that. A couple other things, we'll come back and look at some coins. But in terms of this on the monthly time frame, however, there is a small chance that we get a big push higher to liquidate the shorts at 78K. This signal here, the green arrow, the early reversal indicator, which is our accidental discovery, this helped call the top in 2021 on the weekly time frame. But on this monthly time frame, this is showing institutional programmatic buying and selling. It's only showed plateaued and fired 4 times in the past, starting back in 2015. Actually, we had one down in 2012. That's really too long. But at the bottom here, each time this was the time to buy when this is fired, and why I was telling people to get back in this markets, start buying everything back in January of 2023. We had the bullish early reversal indicator bouncing off this 100 simple moving average. Actually, this is the EMA, the 100 EMA. So usually holds price. And so we could drop down there. But if this holds, guys, if this holds as of June 1st, I'm not going to argue with it. That tells me the bottom could be in. 25% chance, I think 75% chance that we do head lower to this 50K range. Here's why. On the SMAs here, this is on a weekly time frame. We can see that typically the 50, the green line, can be a good barometer. If we're above the 50, that's good, and that can be helpful. If we're below the green, that's the first warning sign that things are bad. And then the 100 SMA also is a good barometer, but we really want to be watching the 200 SMA. That's that purple line that has traditionally held price all the way back here, all the way back here. And we had a throw over here for the COVID crash. Where did it stop? At the 300-week SMA. So the 200 and the 300, very important. Had a bit of a throw over in the 2022 bear market. That, of course, was the FTX gray swan. This was the COVID gray swan. So what are we in for, guys? I think that we'll either come down here to the 61K to retest. That is that 200-week SMA. Again, that purple line, that's generally a good barometer and is held strong here. But that 300-week really is the most important one. So worst case scenario, come back down here to that 50K range. We'll be buying all day long. I think this is the buy zone, anywhere from 48K to 52K, right in there, and that 300-week SMA. So either way, the zone of opportunity right in this green circle. The on the off chance we push higher, I think it's going to be a bear trap, a bull trap, and liquidate the bears. And just to jump over to that, we're going to go look at the heat map, because this chart here shows that the max pain trade is higher to liquidate all of the shorts that were piled up in the 78K range, just a bit over 78,300. And so if they were to run it up there to liquidate those, what 3 trades would happen. They would liquidate the shorts, longs would flip long and go margin long, and then also you've got more people kind of hedging up in that range. So the market makers love to move price up there. There's more commissions for them. Anyway, not to spend too much time on that, but there's more liquidations to the upside. That's why it's still a possibility that we head higher in the near term. But I feel strongly we are heading back down in that 50K range. So with that, let's jump over to this next chart. Now, this is the ISM, the Purchasing Managers Index. Now we can see that the higher highs on this in the 2014 top, 2017 top, 2021 higher highs on that. We really never actually had a bull run according to this. We can also see that, well, the PMI below 50, people were talking about it for that long. Are we going to get a bull run? So we're finally above that, but we need to see liquidity. M2 US net liquidity, there's a relationship there, although M2 has largely uncorrelated, but we can see that 2021 bull run was caused and fueled by the stimulus, the money printing, and the stimulus checks. So we're way down here. We need this liquidity to push higher for that to be meaningful. And this is U.S. net liquidity plus M2 over the U.S. debt. Interesting to watch. Also, you've heard me talk about USDT dominance. We've talked about it in the video yesterday. Won't go into that too much detail, other than this orange line is kind of median, and when money is flowing out of crypto and into stable coins, that's our bear markets. You know, money can only exist in one place. It's either 0 or 1, binary. It's not quantum. There's not a 0 and a 1 million existing at the same time. So as money is flowing out of stable coins down along this line all the way since 2018, these were the peaks in the markets. This was right before that summer correction in 2021, and then here's the November correction and the peak. So this was the peak as money left crypto into stables, and so we saw this similar pattern play out right here. Very similar pattern. I thought it would be like this. We did get an extra bounce out of it. Didn't go all the way to the bear market, but this green pattern shows we're getting a bit of a bounce here if this is going to play out. So the bear market could be targeted over here for September, which would fit the exact timeline that we would normally see. That 12 months after or 52 weeks after the high is usually when the lows are in. and this same kind of timeline. These won't be exact, but this kind of puts our next market peak over here to sort of September 2027, a full year out. So we'll see what happens, you guys. Let me jump back into the daily chart. We'll look at some things that I wanted to share with you, some outliers. And by the way, Zcash has made its run. The sellers are in control. Unless this breaks up firmly above 700 into price discovery, I think the move in Zcash is over. Dashcoin, however, looking pretty good. It has some more strength, although not a lot. I do think this is possible, and we nailed this move up in this range on the downtrending resistances there, but a clean break, a bounce here in the uptrending channel. I love to see a new trend channel forming, a breakout, retest, and resumption. We could certainly see this play out with any strength in these markets. I'm holding a position there. Also say, pronounced shui, I believe, and this chart looking pretty interesting, getting a nice bounce. Our indicators, our trend strength indicator, our RSI indicator, and by the way, if you like this video, like the content, go ahead and click the like. Make sure to subscribe and turn on the bell. We're going to be doing more of these, and we've got some serious alpha to share with you. So go ahead and do that now. Really appreciate that. And if you want to learn more about our indicators here, these are excellent indicators like I call it the Wizard of Oz indicator, that early reversal indicator. When these align, they're so good, you guys. Early reversal indicator, ERI, TSI, and then the RSI. This is bullish divergence. So that's why I think we're setting up for a decent move here in Shui. You can learn more about those at cryptomastery.org. Link is in the description, pinned in the first comment. And also, if you're looking for any one-on-one help really navigating these markets and would like to know how we doubled trading accounts in the last 45 days, look in the first comment as well, where you can book a free portfolio audit with me, where we'll pull up what you're in. I'll create a Google Doc, which I have a template, and we can talk about where you might want to reallocate and for the optimal bull run, which I don't think we've had yet. So you can learn more about that at moonstreamcoaching.com/start. It'll be in the first comment below. moonstreamcoaching.com/start. You get 30 minutes with me. We'll do a portfolio audit, and that's been very helpful with a lot of people. So offering that to you today if you want to check that out. All right, Shui, Filecoin, looking at these, looked like they had some momentum here. They've rejected now. These are two that have 10x potential if they can go back to their old highs. Actually, Filecoin is 40x potential, but until this AI trade is firmly heading higher, I don't think Filecoin's really going to do much. Speaking of which, Venice token, we totally nailed this. We were buying Venice token over here at $9, rode it all the way up to 20. It's pulled back now. Might see another pump on this. It's in a buy zone. Again, you need to have these order block detectors. Yeah, when they ask bank robbers, why do you rob banks? They say that's where the money is. These green boxes are where the money is, where the buyers are. Invariably, that's when price reverses, and invariably, that's when price sells off, which I showed you on Zcash. These really work, you guys, and they're really simple signals that we can teach you. And I'm a 25-year veteran in trading, former founder of Options University. We taught tens of thousands of traders how to trade options and Forex over 8 years, and grew it to an Inc. 500 company. These are the best signals that I've ever used, and our partner is a former quant engineer and trader, so you can trust that they work. He's a full-time trader and a programmer. So anyway, let's take a look at Hyperliquid. Hyperliquid is looking stronger than most. Of course, they are putting, I think, 80 or 90% of their coin profits back into buy and support the token. We have a break into price discovery zone here, a break, a retest. What we want to see here, huge money flow on this candle here, on the weekly candle previously. So I think Hyperliquid is good for another bounce, a breakout, retest, resumption, and off into price discovery. So you want to keep an eye on Hyperliquid. However, here's a big red stop sign and warning sign, bearish divergence on our RSI. I don't argue with those. This is the stop sign for me. This will keep me from buying more, although I'm holding it in my IRA. That's on that weekly time frame. Could we get a short-term pump on the daily? Possibly, but we could just as easily head back down and retest these levels. So be careful out there. It's a sea of red. Another chart that's kind of looking interesting is H-bar. But it's pushing the upper trend range of its parallel channel. We're getting an early reversal indicator, which is good, but I know there's a problem here. These three are aligned on the daily, but the weekly is actually looking pretty interesting. If we can break higher on H bar into a new uptrending channel, then this thing has a lot of legs, at least to double up to this 28-cent mark. I trust my indicators. The early reversal indicator here, hence the name, I believe catches institutional programmatic buying and selling. So that's bullish, very bullish candle. We have our trend strength indicator, green above 20. That's the second mark, and the bullish divergence here. You can get a free copy, by the way, if you want to have a cheat sheet for that. That's at moonstream.io, and I believe it's a free checklist. That's a checklist that we've provided, so you can, it's gamified. So basically, there it is. That was moonstream.io/free checklist. You can download this, and this will give you an interactive worksheet for how to create a trade success score. Real quick, what to do that, you just download it, and it becomes interactive. So it is a cheat sheet. So if you start to see these various signals here, I'll move it over here just so you can see that. If you see this pattern, the ERI, you click that button, and it says you have a trade success score of 1 down below. We don't buy on 1, we buy with 2 or more. This is an interactive PDF. Again, you can get this free. We'll pin the link in the first comment. And then if we start to see more of these, like these 3 I just showed you, the ERI, the early reversal indicator, the TSI is our trend strength indicator, and then that RSI, that bullish divergence on the RSI Pro. There's a number of other patterns and things you can use in here and indicators, so make sure you get a hold of that. Very high probability, the more of those that kick in on the trade success checklist. Okay, so let's go back. I think that's all I had for you guys. Make sure and like the video down below. Really helps us get the word out. And other than that, I don't see a lot. Everything's red. We're waiting for a bounce, but I wouldn't be trying to get in front of a freight train on the way. These are the only charts I really think that are worth looking at. H-bar and SUI, would pronounced Shui, I believe, and the rest of these, not much there. Hyperliquid, keep waiting for that to confirm, but bearish divergence again on that weekly time frame. So even if we get a short-term pump, the weekly time frame, it's heading lower. I think that's 90% chance going to roll back over. But anyway, thanks everybody. Again, check the links in the first comment, like and subscribe, and we'll talk to you soon. Cheers. Bye.